This report presents an analysis of the financial performance of the YTL Hospitality REIT and Berjaya Land Berhad, two established organizations that play important roles in the Malaysian hospitality, tourism and wellness industry. Both companies contribute significantly to the development of the tourism and leisure activity, which are the important sector in supporting Malaysian economic growth. The main purpose of the presentation is to evaluate their financial stability and overall performance by using financial ratio analysis together with the financial forecasting techniques. Financial ratio analysis allows us to assess key areas such as profitability, liquidity, efficiency, and leverage, while financial forecasting helps predict future performance based on the past financial data and the current trends. Together, these tools provide a clear understanding of each company's current financial position, as well as their potential future performance. These two companies were selected because they operate extensively in the hospitality and tourism sector, but represent different business structures, which allow for a meaningful and balanced composition. YTL Hospitality REIT focus mainly on property ownership and long-term leasing of luxury hotel and resort, providing stable rental income and long-term investment value. In contrast, Berjaya Land Berhad manage a wide range of hospitality and leisure properties including resort, hotel and integrated development, which involve more active operation management. Through this analysis, the study aims to provide a clear, structured and academic comparison of the both organizations. By examining their financial performance and the future perspective, this report helps to highlight the strengths, challenge and overall position within a competitive and rapidly changing industry environment.
So for this section, I will briefly present the background of two key companies, namely YTL Hospitality REIT and Berjaya Land Berhad. So to begin with, YTL Hospitality REIT is one of the Malaysia's leading real estate investment trust that focuses specifically on the hospitality sector. The trust owns a portfolio of hotel and resort assets located across Malaysia, Japan, and Australia. Among its key properties are JW Marriott, Kuala Lumpur, the Majesty Hotel Kuala Lumpur, and Bangkok Laut Resort, all of which are well established and internationally recognized hospitality brand. YTL Hospitality REIT operates under a business model that emphasizes long-term lease arrangements, enabling the trust to generate stable rental income and maintain consistent cash flows. This approach allows the organization to remain financially resilient even during periods of economic uncertainty, while continuing to deliver sustainable returns to its unit holder. Moving on to Berjaya Land Berhad, the company is a diversified conglomerate listed on Bursa Malaysia and it was established in 1919. Berjaya Land has a significant operations across several sectors, including property development, hotels and resorts, as well as leisure and tourism-related businesses. Through its hospitality arm, Berjaya Hotel and Resort, the company operates a wide range of hotel and resort properties both domestically and internationally. Berjaya Land Berhad adopts an integrated business model which allows the company to diversify its revenue streams and effectively manage market risks. This strategic approach enhances its business resilience and position the company as the key contributor to the hospitality and tourism industry in Malaysia and beyond. In conclusion, both YTL Hospitality REIT and Berjaya Land Berhad play important roles in supporting the growth and sustainability of the hospitality sector through their stable business structures and strategic asset portfolios.
For this slide, I will explain the trend analysis of YTL Hospitality REIT for the years 2023 and 2024. First, in terms of liquidity, the company's position became weaker in 2024. The current ratio dropped from 0.68 to 0.20, which shows that current assets were not enough to cover short-term liabilities. The quick ratio and cash ratio also decreased, with the cash ratio falling from 0.33 to 0.09. This means the company had very little cash available to pay short-term obligations such as bills and short-term debts. Because of this, YTL Hospitality REIT faced higher liquidity risk in 2024. However, when we look at profitability, the company performed better. The net profit margin increased from 29% to 32.1%, showing better cost control and higher efficiency. The return on equity also improved from 4.89% to 5.98%, while return on asset increased from 2.70% to 3.27%. This result shows that the company was able to generate more profit from its asset and shareholders' funds. In conclusion, YTL Hospitality REIT shows strong profitability growth, but it needs to improve its liquidity to remain financially stable. So that's all from me. Thank you.
We discussed the trend analysis of Berjaya Land Berhad. From the liquidity aspect, the company showed a little improvement in 2024. The current ratio increased from 1.02 to 1.09, and the quick ratio also improved. This showed that Berjaya Land was more better at meeting its short-term obligation. However, the cash ratio decreased a little, meaning the company still had limited cash. On the other hand, profitability declined sharply. The net profit margin dropped from 3.26% to only 0.04%, showing that the company earned very little profit. The return on equity and return on asset also decreased, which means shareholders received very low return and assets were not used efficiently. In terms of solvency, the company debt level increased, showing higher dependence on borrowing. This increased long-term financial risk for the company. Overall, Berjaya Land improved more in equity. Its weak profitability and higher debt show the declining financial performance.
Liquidity ratio. Berjaya Land is better at paying short-term debt. Its current ratio is 1.02 compared to YT Hospitality REIT 0.68, meaning Berjaya Land has slightly more current asset than liability. Quick ratio is 0.74 and highly YTL 0.68. YTL has cash available with cash ratio 0.33 compared to Berjaya Land 0.15. Profitability ratio. YTL Hospitality REIT is much more profitable, while gross profit margin is 51.6%. Then Berjaya Land has 25.5%. YTL net profit margin is 29%, much higher than Berjaya Land 3.26%. YTL has yearly return with ROE 4.86% and ROA is 2.75%. Solvency ratio. YTL Hospitality REIT uses less debt. Debt to equity ratio is 0.76, while Berjaya Land have 1.43. YTL debt to asset ratio 43 ratio, and then Berjaya Land 8.8%. YTI interest cover ratio is 0.66 and Berjaya Land have 1.58, so it can interest more easily. Efficiency ratio. Berjaya Land use asset better. Asset turnover is 0.51 compared to YTL 009. Berjaya Land receivable turnover is 4129 and YTL 2.18. Inventory turnover 302.41 and payable turnover 38.7 for hospitality rate. Overall, YTL Hospitality Rate is very good of making profit and use less debt, but as workers short-term liquidity. Berjaya Land is better at managing cash and operation, but it's earn lower profit and rely more on that.
Hello everyone, my name is Nida Sri and I like to present about the comparison of YTL Hospitality and Berjaya Land in 2024. For this slide, I will compare the financial performance of YTL Hospitality and Berjaya Land based on liquidity, solidity, profitability and efficiency ratios for the 2024 year. In first term, in liquidity, Berjaya Land shows a much stronger position. Its current and quick ratios are higher, which means the company is more capable of meeting its short-term obligation, while YTL Hospitality is extremely low liquidity ratios, indicating potential difficulty in paying short-term liabilities on time. Next, looking at solvency, YTL Hospitality has a lower debt level as shown by its lower debt equity and debt to asset ratios. This means the company relies less on borrowing compared to Berjaya Land. However, Berjaya Land has a higher interest coverage ratios, which shows that it's better able to pay interest expenses from its operating income. Moving to profitability, YTL Hospitality clearly performs better. Its record higher gross profit margin and net profit margin, as well as stronger return on equity and return on asset. This indicates that YTL Hospitality REIT is more effective in generating profit from the operation and assets. On the other hand, Berjaya Land net profit margin is very low, suggesting baking profitability. In terms of efficiency, Berjaya Land shows better performance. The company has higher asset, inventory and receivable turnover ratios, which means it's used to asset more efficiency to generate revenue. Meanwhile, YTL Hospitality has such a lighter payable turnover ratios, indicating that it pays the supplier more quickly. Overall, we can conclude that YTL Hospitality is strong in profitability but weak in liquidity, while Berjaya Land is stronger in liquidity, operational efficiency, but has lower profitability and higher leverage. This comparison highlights how each company has different financial strengths and weakness.
Present about overall analysis of the financial performance of YTL Hospitality REIT and Berjaya Land Berhad using the trend and cross-sectionary analysis. In 2034, YTL Hospitality REIT showed a generally positive performance, mainly driven by stronger profitability. Its net profit margin increased from 29% in 2023 to 32.1% in 2024. Return on equity rose from 4.86% to 5.98%, and return on asset improvement from 2.75% to 3.27%. This figure indicate that YTL become more efficient in generating return from its revenue, equity and asset. However, this improvement comes with a significant decline in liquidity. The current ratio and quiet ratio both drop sharply from 0.68 to 0.20, while the cash ratio fell from 0.33 to 0.09. This suggests that YTL may face challenges in meeting its short-term obligations. In addition, its leverage increased as shown by the rise in the debt to equity ratio from 0.59 to 0.71 and the debt to asset ratio from 0.33 to 0.39, indicating higher dependence on debt financing. On the other hand, Berjaya Land Berhad show a different pattern. Its liquidity position improvement slightly, with the current ratio increased from 1.02 to 1.09 and the quiet ratio from 0.74 to 0.8. 0.84. Despite this profitability declined sharply, the net profit margin fell from 3.26% to almost zero at 0.04%, while ROE and ROA also dropped significantly, reflection weaker return and lower asset efficiency. Solvency also worsens as book debt ratio increasing, indication higher financial risk. From the cross-sectionary analysis, YTL Hospitality rates outperformance Berjaya Land Berhad in terms of profitability, efficiency and overall financial strength. Although Berjaya Land maintain better liquidity, YTL delivered stronger return and maintain lower leverage.
The cross-sectional analysis for 2023 and 2024 indicates that YTL Hospitality rates outperform Berjaya Land Berhad in most financial aspects. In 2023, YTL recorded a much higher net profit margin of 29% compared to Berjaya Land's 3.26%, as well as a stronger gross profit margin of 51.6% versus 25.5%. YTL also achieved higher ROA and ROE, reflecting stronger profitability and efficiency. This performance advantage continued in 2024. YTL reported an exceptional gross profit margin of 209.9% and maintained a high net profit margin of 29%, while Berjaya Land recorded a near zero margin of 0.04%. YTL ROE remained significantly higher, indicating superior return to shareholders. Although Berjaya Land demonstrated better liquidity in 2024, YTL maintained a stronger overall position in terms of profitability, efficiency, and solvency, with lower leverage ratios compared to Berjaya Land.
From the cross-sectionary analysis, YTL Hospitality rates outperformance Berjaya Land Berhad in terms of profitability, efficiency, and overall financial strength. Although Berjaya Land maintain better liquidity, YTL delivered stronger return and maintain lower leverage. In conclusion, YTL Hospitality REIT demonstrates superior overall performance but must improve its liquidity management, while Berjaya Land Berhad need to address its declining profitability and rising financial risk.
In conclusion, this report evaluates the financial performance of YTL Hospitality, REIT and Berjaya Land Berhad using trend analysis and cross-sectional analysis to assess their liquidity, profitability, efficiency and solvency. The findings show that YTL Hospitality REIT demonstrates stronger overall financial performance, particularly in terms of profitability and operational efficiency. The company recorded higher profit margins and better returns on assets and equity, indicating its ability to generate stable earnings, although its liquidity position weakened. Its controlled debt levels support long-term financial stability. In contrast, Berjaya Land Berhad show weaker financial performance despite a slight improvement in liquidity. The company experienced a significant decline in profitability, high leverage, and lower operational efficiency, which increased its financial risks. Overall, YTL Hospitality REIT can be considered the stronger company financially compared to Berjaya Land Berhad. This study highlights the importance of effective financial management and ratio analysis in supporting informed decision-making by investors, management, and other stakeholders. Thank you.